carpentry services as a sole trader for many years. He is considering the incorporation of his business. So first of all, he is a sole trader. So all we're talking about sole trader. Now he's thinking to incorporate his sole trader into the limited company.
Excellent.
So the following information is relevant. Mr. Hodgson last accounts were for the year ended 31st March 2021. They show turnover of 175 and a net profit of 80,000. He has no other income. So here we need to think about that net profit. Shall we start with the net profit? More relevant because we're going to adjust this figure 80,000 pounds later.
Exactly. It's a higher rate taxpayer effectively.
Okay. The business is run from freehold premises owned by Mr. Hodgson. The business has 8 vans, which are used 100% for business purposes. Mr. Hodgson also used his private car for business purposes, and mileage record indicate that the business use percentage is 60%. There is also a significant amount of plant and machinery and computer equipment. So we understood that we have got a freehold property here, which will be useful for us because this will be go to the company, transfer to the company. And also we can see here this subject will be capital allowances because he has got lots of vans, computer. So definitely will be some capital allowances here.
The business has 8 vans, which are used 100% for business. So yeah, capital allowances. What are your thoughts on the private car for business purposes?
When we're talking about adjust capital allowances for the sole trader, we will consider to adjust capital allowances accordingly to the business use. So we only can deduct a business use for capital allowances. If we move to the company, we don't care about this. Company, we can claim capital allowances as 100% regardless of business use.
Okay, why? Because
it would be subject to benefit in kind.
Excellent. That's what I'm looking for.
Oh, so why? Just like you.
So basically, the company can't. The company, as in I Limited, it can't sit in a car and start driving. Okay, it's you as director that drives the car. 2 separate legal entities. So therefore, you claim full capital allowances, but you are using the company's car for private purposes. Therefore, it's a benefit in kind. So it's a legal sort of aspect. You need to understand from a legal side. The company owns the car. You are driving the car for your own personal use. And I think that's the key thing. Once you fully get your mind around this whole separate legal entity thing, you're completely fine. You understand what's happening. So subject to employment income under the benefit in kind rules. What can he do then? What are your thoughts? Like, if he uses the car 60% for business, what else can he potentially do?
What do you mean? I don't.
Okay, that's fine. It's a bit of a vague question. Sorry. What I mean is the other thing he can do is the car, he can keep it personally.
Okay, and claiming mileage allowances, not allowances, like business mileage business rate.
Yeah, HMRC's approved mileage rates. What are the rates?
45% per first 10,000, and the remaining mileage can claim 25p per mile.
So that's the other thing you can potentially do with the private car for business purpose. Continue, please. Sorry.
His wife works part-time in the business and is currently paid a salary 6,500 per annum. She has no other income. What we have to do with this?
I think that's just information. She works part-time, salary 6,500. You just need to check that that salary is in line with her actual duties. Because I remember I mentioned to you about the whole excessive thing. If something excessive, then...
Oh, then a pension contribution. You mentioned about it. If he's going to pay like 12,000 to the pension fund, it would be not good because they have to pay tax. Am I right?
Exactly. You can think about pensions as well. That's correct. Yeah, with the wife thing, you can potentially say that, look, so what's happening right now? He's a sole trader. Wife works part-time. She gets a salary of 6,500. That's an allowable deduction for Hodgson Carpentry Services. However, Hodgson Carpentry Services Limited, you make the wife the employee, you get an allowable deduction for 6,500. A tax planning point would be, if he wants to, it may be beneficial of making her a shareholder as well in the limited company.
Shareholder, okay.
What are the benefits?
Benefit is she can receive some dividends income up to 2,000 dividends allowances free of charge. And also she can he can pay to her up to personal allowances like 1,250 or even below the threshold of national insurance. So they can save some money on tax and national insurance.
Exactly. So I think that's all you need to sort of consider there. And you can say that her salary will still be an allowable deduction for the company. You can also mention that the company will be subject to, if it exceeds the primary threshold, class 1, secondary contributions.
Yes.
Continue, please.
Mr. Hodgson originally purchased the business for £30,000 from his father in 2001, and of which 5,000 represent the market value of Goodwill, and the balance was allocated to plant and machinery. So we have got here the Goodwill, and oh dear, no, I stuck here. I believe we have got a Goodwill, and the remaining will go to plant and machinery, and we can do what capital allowances charge here.
Yes, so 25,000 was plant and machinery. What are your thoughts on the 5,000 Goodwill? What can we do?
We have to be careful here because Goodwill will be not subject to business asset disposal relief.
Exactly.
We have to be careful here, and not a lot.
Yeah, so the Goodwill is a chargeable disposal. It's a chargeable asset for capital gains tax purposes.
Yes, it would be he has to transfer this to the company.
Exactly. Exactly. So
we have got 5,000 definitely will go to the into the company, transfer into the company. Okay.
So now what I explained earlier, the CGT and the income tax implications. The question now for you is, it's time for you to discuss the tax and NIC implications of the incorporation of the business, the cessation of the sole trade, and the benefits of trading as a limited company. So there's 3 things we need to do here. The first thing is tax and NIC implications of the incorporation of the business. How would you go?
Tax and national insurance implications for, first of all, that he is a sole trader. If he thinking incorporated, it means that his sole trade, the business will cease. And also as a sole trader, he will be taxed to income tax and capital gains tax on his income tax and national insurance, on his income, on cessation. And also, what is the, we have to talk about close year rule, overlap relief. And here we have to mention what is the benefit for limited to move his things to the limited, incorporated into the limited company. It's the first benefit of how he can extract the profit from the company. Limited liability, because at the moment he is liable for the whole, he has whole liability to all his, but when he moved to the company, it would be only company liable for whatever liability, yes. And also as cessation of the business, easy to gift shares than actually sole trade the business.
Exactly. So you've effectively discussed the general implications. The second bit is the benefits of trading as a limited company. So in terms of taxation, what are the benefits?
So I will start with benefit incorporation, yes?
Yeah, exactly. Benefits of trading as a limited company. So benefits of incorporation, exactly, yeah. Go for it. What can we say?
Pardon, what?
So what are the benefits of trading as a limited company rather than a sole trade?
How you can extract the profit. Because at the moment, all his income subject to the income tax and national insurance. When compared to the company, he will save some money on the class national insurance. Also, he will consider to how much profit he will extract from the company.
Exactly. You can fix your income from the company.
Yes, it's
but
not.
As a sole trader, you'd be subject to everything regardless. Drawings are irrelevant.
So he can decide it how he can extract the profit from the company, how he would like to. What else? So this. Then we're talking about. Do we have to talk about limited? Do we have to say he will have a dividends income? Do I need to say he will maybe consider lend some money to the company?
I'm not sure about the lending. You can, if the company needs money, then yes, you charge interest on the lending. But that is a profit extraction strategy. But in this question, I'm not too sure if you'd get a mark for that. I think it's a bit too random, meaning that why would you just start lending? Because it looks like his business is doing fine. So I think that'd be fine. But what you'd say is exactly what you mentioned. You'd have a profit extraction strategy. You'd probably take up to the personal allowance subject to class 1 rather than class 2 and 4 now. And you'd say dividends would be available, and the lower rates of dividend tax, 7.5, 32.5, 38.1, are lower than 20, 40, 45. Therefore, the balance of the income should be taken as dividends up to the basic rate band. We mentioned the wife should come in as a shareholder, and she should do the same thing. You can potentially mention that you can withdraw or profit extract from the company by way of you'd mentioned, the salary you'd say is fully deductible for the company, as well as class 1 NICs. Then you'd say that benefits in kind should be made use of. So 1 mobile phone, all these small bits. You can say a loan up to £10,000 will be tax-free. However, what are your thoughts? If I take out a loan, let's say I have I'm director, 100% director of a limited company. I take out a interest-free loan of £10,000. What are the tax implications?
It is the penalty tax, section 455, and the company has to pay tax on this. If the loan hasn't been repaid within 9 months after the year end. So it is related to the director. If you are the employee, it is, I don't know, it is the company doesn't pay penalty tax on loan, but it will be treated as a benefit in kind. If the loan is up to 10,000 or 15,000, I'm not sure.
For who? The employee or the?
For employee.
Employee is up to 15,000 is fine. But no, that's good. Section 455 is an area that's commonly examined, so we will definitely look at that in in one of our future lessons.
Mm-hmm.
So obviously it's the whole rules regarding close companies. A close company is a company with 5 or fewer participators. And the reason for the anti-avoidance provisions is due to the high level of financial control these participators exert over the company affairs. That's a different story. The final thing we can mention is if he was to retain the freehold premises personally, then incorporation relief won't be available. Gift relief would have been available. And you would say, and then he can charge market value rent.
Okay, rental income possible if he can retain the property. Okay. Mm-hmm.
Rental income, no NIC, so you're saving NICs. However, you might have some business asset disposal relief issues if you
charge the full amount. Yes.
Mm-hmm. Exactly, if you charge full amount, exactly. So can you see everything somehow gets connected back again?
I can see everything with your help.
No, it's good. It's good. The more we talk about it, the more you'll pick up and understand. That's not an issue.